All right, good morning, everyone. Let me know if you can hear me. My name is John Paul, founder of DayTradeToWin. There should be a chat box there where you could go ahead and post your questions and answers. This is a live event, so you can go ahead and ask your questions. All right, we have Ben, Daryl, Fahim, Greg, Joe, John, Keith, Christian, Remy, Victor, Todd, Tamer, Robert, Vic, Patrick. All right, everybody, Nina. All right, so what we're going to do today first, for those of you who may be new to trading, is focus on looking at price action. Today I'm going to show you the signals, looking at yesterday, what happened, kind of get a general sense of what the market is doing. If you're a seasoned trader, I encourage you to ask questions as well, since you have me here. We do have a lot of good things here on the website, especially for those of you who are interested in, for example, downloading the news indicator. You can download that as a free trial if you come here to courses and software and go to downloads. We do offer here the news indicator for NinjaTrader 8, so if you haven't downloaded that already, you can download that for free. It's a free trial. We do include it with most of the products, so if you purchase the trade scalper or the Atlas line, we probably give that to you anyway for free as a lifetime license. We also have, I think, a good variety on the blog of topics that you may be interested in. So for example, if you want to learn how to trail a stop, if you want to learn about orders, we do have, if you do a search, you can have a wealth of information on how to place orders, what is a stop order, a stopwood limit, a market if touched order. You just do here a search and you'll find all of the information that you need. The other thing we have here besides the blog is we have a videos list of trading videos. We also have reviews and testimonials. So these are areas where if you haven't investigated the DayTradeToWin site, it's a pretty in-depth site, and I encourage you to investigate it. And you can always contact us here at the Contact Us page here as well. Or you can leave a message, give us a call. We're happy to answer your questions. I want to make sure that trading is the right fit for you, especially the type of trading that we do. Now, if you're looking at the markets, there are a few things that I like to do. So we have the Trade Scalper, and the Trade Scalper is a method of scalping numerous times throughout the day, let's say 3, 4, 5 days in a row of just taking either 3 or 4 trades a day, or maybe you want to trade 20 times a day. Now, I don't think that trading 24 hours a day is the right thing to do, so I'm not stuck to the computer, but once you've traded 5 or 6 times, and if you're up and you have some gains, some profit in your account, it's time to stop. And the more you trade, obviously, the more risk that you're subjected yourself to. So the goal isn't to just trade all day long. It's really to focus on the good setups, the good trades. A few times a day is really all you need to start off with. Besides the Trade Scalper, you can read all about it here. We have videos, and here are the courses, the course example that's included with it as well. We do have the Atlas line, and the Atlas line is something that a lot of people ask me, what is it, or what does it do, or how does it work? And I'll show you the Atlas line today as well. So the Atlas line is not something that is a moving average or any type of MACD or indicator or anything like that. The Atlas line is something a little bit different, where it focuses on the tangent and the cotangent of the price and the trading, and it calculates this formula, and it looks at, after we have the Atlas line plotting, this is yesterday, it looks at whether or not to be a buyer or to be a seller, depending on if the market is trading above or below the Atlas line. So what we're looking at here is price trading below the Atlas line right over here. All right, Todd, if you have any sound issues, I'd recommend exiting the room and re-entering the room. Usually that helps as well. So if the price is trading below the Atlas line, what we're doing is looking at selling the market. If the price is trading above the Atlas line, we're looking at buying the market. So the idea is to first know the direction. If you know the direction, it's half the battle. So looking at this, as the market is trading above the Atlas line, we are and want to be buyers. If the market is trading below the Atlas line, we want to be sellers. Now, knowing the direction is only, like I said, half the battle. Instead, let's focus on price action to get us into the market. So, as an example, one of the rules for this main signal is after we have a crossing of the Atlas line or we have 2 consecutive candles closing, I want to be a buyer or I want to be a seller. So the reason for this signal short here on the software is because we have the price beginning to trade and having a closing price below the Atlas line, and that's the exact price here on the euro to go short. Now if I look at the E-mini S&P, it's one of my favorite markets, the idea is the same. I want to be a buyer when the market is trading above the Atlas line here in the E-mini, and I want to be a seller when price is trading below the Atlas line. But again, we have to use rules to dictate whether we go long or short. And so as part of the program with the Atlas line, it's not just the software, it's the training as well. So when we have, as an example, 2 consecutive candles closing above or closing below, it fires off a signal. So that's one of the signals. The other signal that the Atlas line produces, if you look here on the back end here of the Atlas line, it has a bounce trade, it has a pullback trade, a strength trade, it has a checkbox here if you want to use the pullback and strength trades as part of the signals. You can use the average true range, the ATR, which is down here, as a filter, and really what that means is when the market's too slow, we shouldn't be trading. And typically I say if the market is less than 3 or 4 ticks, you don't want to be trading on a 5-minute chart. On the alert wave file, this is a sound indication, so as soon as we have a signal, you can hear an audible alert. You can have any sound that you want linked to this. And you can adjust the text size and all the colors and all that good stuff. But ideally, there's no optimization required. So regardless if you're using E-mini, NASDAQ, Euro, the currencies, the FDAX, the FTSE, it doesn't really matter. What we're looking at is price action first and foremost, and using the Atlas line to tell us, should I be a buyer or should I be a seller? And then you can trail a stop and all that good stuff. Now the S's that you see here, these S's are telling me that there's strength in the market and to sell it. Just like here, there's a pullback in the market to sell it. And here's strength in the market to sell it. And so on. A pullback in the market to sell it. So what you're seeing here with these additional signals are additionally to buy or to sell as the market continues in your direction. And every trade that you see should be and continue to be lower and lower and lower, because the health of the trend, if you're thinking about price action, really matters. So if there's a trend, we're not going to be selling as the market is going up. We're going to be selling as the market continues to go down. Or as the market continues to go up, we're going to be buyers. So part of the equation here is built in with the Atlas line is signals will only be fired off if the entries are higher than the previous entries. It's part of the program as well. And this is all taught in the course. Once you log into the members area, there's videos, there's training videos, there's live training that happens every Friday. So we try to make this as intuitive as possible for traders, new traders, or more seasoned traders that want to get a little bit more advanced. We really try to assist with that. So this is the Atlas line. This has been trading for probably about 10 to 15 years. It's very strong. Sure, you're going to have some days that the market flip-flops. Let me see if I can find you a situation where I don't want to just focus on the good. I also want to show you where things can be problematic, and the Atlas line can probably help you in that fashion. So let me see if I can find an example where there's also trades that don't work. So all these trades that you're seeing, this happens to be on June 28th, was successful. So this one, to go long, we look at the ATR here on the expectation, 3-4 points, and the market went up at least 3-4 points. So that's really the goal, knowing the target, using the ATR for a specific target, specific entries, and the direction. Am I going long or am I going short? It doesn't have to be complicated. I think if you look at it as simplistic as you see it here, price crossed the Atlas line, there's a short signal. What's my target? Target is at least 1 times the ATR. So here, 2 points, 1.5 points to start off with, and away it goes. The same thing here with this long signal when it crosses back up. And then, like I said, strength trades, pullback trades, all additional opportunities to buy or to sell. If it continues, that is, if it continues. And so remember, if price is trading above, I want to go long. But there are situations where, let me just go back another day, see if I can find a situation where we have more of a flip-flop, because the problem with trading as well is not just looking at all the good that happens. We have to also understand when the market is chopping or flip-flopping. How do we handle that? So what I like to do as a trader, if the market is not going in my favor, we have to have some type of protection or stops or a rule-based management to say, let me get out of this trade. So let's take, for example, this short signal here. This happened about 2 o'clock Eastern Standard Time, and this is a short signal, 42.66.75. And again, I don't make this complicated. You should know that the signal to go short is going to happen because first, the price is trading below the Atlas line, and second, we have 2 consecutive candles closing below the Atlas line, and that will fire off a signal. So that automatically tells me that we are going to go short. I just have to wait until the candle closes. So this candle right here, when it closes, I know there's going to be a signal. The closing price of this candle is my entry to go short. So 42.66.75 is my entry to go short. Very simple. It's not complicated. It's basically saying I'm selling it at this price, waiting for the candle to close. Then I look at the ATR and I say, well, ATR is kind of slow. It's about 1.25, 1.5. That's my expectation. So in reality, this is the only thing that we know at the moment, right? That's it. We don't know anything else. We know that this is the closing price. This is 42.66.75. Coincides with the text, the signal that appears. I look at the ATR, it's 1.25, 1.5, a point. Even if you just want to take 3 ticks, I'm selling it to go down. That's my goal, to do that. Now, if the trade doesn't work, how am I going to get out of this trade? Well, I like to use a time-based stop. You've probably heard me say this in most of my videos. Protect yourself with time. Protect yourself with a catastrophic stop. So if the market has some type of catastrophe, some great news comes into the market, and instead I see the market go up, there has to be some type of catastrophic stop in place to protect you. There's also a prove it stop. So I'm looking at this in 3 ways. Whether or not the trade goes in my favor and makes me some money, I need to be out of this by time, by proof, or by the catastrophic stop. So I'm protected in those three ways. So as I go forward here, the next candle goes straight down. So again, I already know what I can expect from here to here. Let me just do that. The market went 1 3/4 of a point. Remember, and this is all taught, if you're new to trading and if you're wondering, well, what's the ATR, or what, how is he calculating the target? And just to give a quick understanding of it, this indicator, the average true range, it's called the ATR, is on all charting platforms. So it's not specific to NinjaTrader or TradeStation or any other trading platform. Most trading platforms have the ATR. And so I'm using a setting of 4, and I'm using a 5-minute chart. So basically, this calculates the last 4 candles and tells me what can I expect the market to move in the next 4 candles. So right now, I can expect the market to move about 1.25 within the next 4 candles, and that would be my target. Does that make sense to everybody? Just to be clear on how the understanding of price action works in coordination with expectations, and I can't expect this market to move 10 points, right? I can only expect it to move 1.25, and then I can trail a stop, or then I can, find out if I want to hold on to it. But essentially, thank you, Christian. So essentially, I say to myself, yes, I'm selling it at this price. Here's my target. Catastrophic stop is typically 2 times the ATR, so I would risk 2.5 points, but never more than 5. I never want to risk more than 5 points on any trade. So you're looking at a catastrophic stop of about 2.5 points, and a prove it stop would be if any candle closes on the opposite side of the Atlas line. That would be my proof or my prove it stop to get out of the trade. So when I look at this and I say, well, I'm going short, but if this doesn't go down and instead a candle closes above the Atlas line, it could be by a tick, 2 ticks, 3 ticks, I'm immediately out of the trade. So the catastrophic stop is there as a last resort. The prove it stop will get me out at a smaller loss, so you're not always risking just one hard stop. And the time-based stop is also win, lose, or draw, typically 4 or 5 candles after you enter. If you're not in profit territory, or if you haven't made your target, or if you're still in the trade, it's still kind of flip-flopping and not going in your favor, out of it. You're done. You're calling it, calling the trade over. We're looking for the next trade, whether that's scalping, whether that's another Atlas line signal, pullback strength trade. We're finished with this trade. And I always think, as a rule of thumb, the longer that we're in a trade, the longer it takes for a trade to develop in your favor, the worse off it is, and to a certain degree that you were just holding on and waiting, and I hope it's going to work out, I hope it's going to turn around. Usually within the next 4 candles it should go in your favor. And the reason is we entered for a specific idea. Based on rules, we entered for this reason. It should materialize immediately. We shouldn't see this finally go in our favor an hour later. It should be almost immediate. And so that's the idea. So we have, if you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.